Good evening, everyone. My name is Sriram from the Commodity and Currency Research Desk at Reliance Securities. This is the Commodity and Currency Research Outlook for 23rd August 2022. Starting with the commodity side, starting with energy, international and domestic prices remained under pressure this Monday afternoon session and could continue its weakness this evening, pulled down by slow global growth and supply boost. Prices were choppy, were volatile this Monday afternoon, and could continue to see a volatile and choppy, and could possibly see more weakness in Tuesday's session as well, over escalating fears of a global slowdown as global central banks push aggressive rate hikes to cool surging inflation. Traders will also be closely monitoring efforts to revive the 2015 Iranian nuclear deal, which, if agreed, will boost exports from the country by about 2.5 million barrels per day and ease supply concerns, and this could also weigh on sentiments. So the range for the domestic crude oil futures for the next 24 hours or so can remain between 7,000 on the lower side to 7,300 on the upside of things. Moving to the bullion side of things, gold started this Monday morning on a weaker note below the $1,750 per ounce mark, and could continue to remain under pressure this evening session as a string of hawkish remarks from US policymakers lifted the US dollar and treasury yields and dented bullion demand. Looking ahead, prices could extend its weakness into Tuesday's trade as well, as the dollar could continue to strengthen ahead of that Fed Chair Jerome Powell's speech at Jackson Hole Symposium later this week. So we believe that the range for the gold markets, overall bias still remains negative for the gold markets, and ahead of that Fed event, or ahead of the Jackson Hole Symposium event, we feel gold markets can remain under pressure. The range for gold futures on the domestic side for the next 24 hours or so will remain between 51,000 on the lower side to 51,400, 51,500 on the upside of things. Briefly on base metals, international and domestic copper prices gave up most of its gains this Monday afternoon session amid pessimism about the global and Chinese economy. Prices did indeed briefly recover in the early morning session after PBOC slashed 1-year LPR loan prime rate and the 5-year LPR to boost or to provide some stimulus for the faltering economy. But markets gave up most of its gain and is remain under pressure this afternoon session, and possibly can remain weak this evening session as well, over escalating fears of global economic slowdown. Of course, a stronger dollar, which has been rallying over the past few days, can also weigh on sentiment. So overall weakness can persist into the Tuesday's trade as well for both domestic and international copper prices. So range for the domestic copper prices over the next 24 hours or so can remain between 660 and 680 on the upside of things. Finally, on the currency side of things, the Indian rupee continued to weaken against the dollar on Monday as the greenback continued its rally on the US Federal Reserve hawkish stance. The rupee spot ended at 79.8675 versus 79.7750. Session low was 79.9125 this Monday's trade. The rupee did briefly strengthen earlier in the session, tracking the weakness of crude oil prices. However, markets, as I mentioned, gave up all its gains to end weaker for the session. Of course, strength of the dollar weighed on sentiments, but the Asian and emerging market peers also remained under pressure this Monday's trade. With Chinese yuan has definitely weakened this Monday, and in fact has fallen to a 2-year low this Monday. So this also weighed on the domestic sentiments in this Monday's trade. In the overseas market, the dollar index continued its upward momentum this Monday afternoon session, and possibly can continue to gain in the evening session as well, after Federal Reserve officials reiterated their aggressive monetary policy stance. The euro briefly broke the parity against the dollar this Monday morning and afternoon session amid concerns that a 3-day pause to European gas supplies later this month will worsen the energy crisis going on in the country. So looking ahead, we feel the rupee could continue its weakness onto Tuesday, and We see possibly during the week it can extend losses during the week as well, and possibly test new lows on prospects that the US Federal Reserve will continue its aggressive policy stance during its September meeting. Worries about domestic inflation could also keep the local unit under pressure. Recent RBI monetary policy minutes also reflected that, and the central bank remains worried about the higher inflation, and that could also weigh on sentiments back home. However, presence of the Reserve Bank of India can cap losses for the domestic unit. Recent data has suggested that India's FX reserves fell to $570 billion in the latest week. So we feel that the bias for the currency can remain on the weaker side of things, but the range for the spot pair on Tuesday for the Tuesday's trade will be anywhere between 79.25 to 80 on the upside of things, and the dollar index range can be anywhere between 107.40 to 109.10 on the upside of things over the next few trading sessions. So that's it from our side. Thank you for listening. Have a pleasant day. Thank you.